why it's really important to have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this DJ?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about the permanent loss.
But really, at the end of the day, it's just a matter of a macro market. It's just what happens.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so we can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Good evening, ladies and gentlemen. Welcome back to the DGen Roundtable, our Sunday flagship news show. I'm your host, Zenith, here tonight, and I'm joined by my excellent co-host, Will, who is also joined by a traveling companion, it looks like. Will, how you doing, buddy?
I am doing great. This is Mama Dog. Hello, everybody. Everyone says hi to Mama Dog. She likes to look out the window whilst we are holding still, and Sam's inside grabbing a pizza. I'm doing great. Life is good. At some point, she's going to hop up behind me, but until then, I guess you guys get to see her finest fur over here on the right hand side. But yeah, tell the folks at home what you were telling me earlier. I heard that you were playing some golf and did like a pretty damn good game and shit.
Yeah, so happy 3-day weekend, everybody. Playing golf on a Sunday feels good. I think I might get a little bit sunburnt today, but it could also just be the lights in the studio. But I had a great day, dude. It was 65 or 60 degrees and sunny with like minimal wind. And it was fantastic. I think I ended up playing 18, the full 18 in right about 3 hours, which for people that know golf, like that's pretty dang quick. So,
that's yeah.
That
it was not bad at all. It took us how long to do our golf game when we were doing it in Vegas?
Definitely 4, maybe closer to 5, because we were, having shenanigans at the end because we were like, we're not fucking winning this thing. Might as well have some fun. Gosh, on that last hole, I think we're all just like taking just hero shots trying to clear this lake. And I swear, between like 6 of us, we probably put like 12 golf balls in the water.
It was a good time, man. It was a good fucking time.
Yeah, but no, I ended up shooting an 84 today, which for me, that's actually a pretty dang good score. It was just one of those days where like the driver, it was just working. I wasn't losing balls. I think I lost like 2 balls all day, which is unheard of. And I lost one of them that I had pretty much with me the entire time on the last hole. And I was like, oh, dang it. Oh, but yeah, beautiful day. Dude, can't complain. It's fantastic. I mean, this is a interesting little 3-day weekend we had because yesterday was Valentine's Day on a Saturday. So a lot of folks were out and about for that. And then today for Sunday, a lot of people got off tomorrow. So you might as well, keep the party going.
Get after it, baby. Hell yeah.
True,
I like it.
Yeah, but outside of that, it's kind of crazy to say, we actually don't have all that much to talk about here tonight because you found a couple of the headlines. I got some other just like larger crypto narratives going on. So realistically, what we're looking at is classic centralized exchange blunder. Thanks, Coinbase. We have the Netherlands actually proposing some new tax laws for crypto that are steep, I will say.
Oh, it passed. It's not proposed. It's happening. Yeah.
Whoa, okay.
Fucking sucks for them. But sorry, continue.
RIP homies. But yeah, then after that, we just kind of got the classic ongoing debate of, are we in the bear market? Are we not? Do we get extended cycle, shortened bear market? What the heck's going on? We got a good Tom Lee clip for you, and then some other clips to play as well. But yeah, outside of that, I mean, right now, really the main storyline is this right here, which price. If price is the main storyline, it kind of means that there's not a lot going on or the market's kind of going catastrophic. And well, we've been sitting for a little more than a week at this point and not much is going on. We're kind of settling into a new area right around that 70K mark. And people are contemplating what that means for their holdings in the future to come. But right now, we're just kind of in a holding pattern. Here in the United States, we're still waiting on crypto legislation to come through. Every week, I have more clips from either President Trump himself or the crypto czar or Scott Bessent, the Treasury Secretary, of people just talking about like, yeah, this thing's happening. It's like, brother, you've been saying that for over a month at this point. I'll believe it when I see it.
Yeah. And then all like You were saying earlier the fear and greed got down to like what, a fucking like a 5 or some shit for
5.
Bitcoin.
Yes. So for the folks at home, this is something I want to touch on a little bit later, but it's also a very important point, which is that the crypto fear and greed index got all the way down to 5. Keep in mind, this is indexed from 0 to 100. So getting all the way down to 5, that is way out there on the end. The last time we saw a 5 or anything near that was a long time ago. Back in 2022, bottom of the bear market when FTX collapsed, we hit a 6. Before that, there's this weird anomaly on the chart. I was looking at this with some of the Walk the Block guys the other day, and we were trying to figure out what was going on with this singular data point right here, because that's August, the 16th of August in 2019, or rather the 2nd of September, I think, or late August.
Yeah.
Either way.
Oh, this is fear and greed charted?
Yeah. Either way,
oh wow,
this is an anomaly, and we haven't seen anything this low in a long time. Like, even when we had COVID, we only got all the way down to like 9 a couple of times there. So getting all the way down to 5 on Bitcoin fear and greed, especially when there's so much money that's in the market at this point, it's truly a bit of a like outlier. And the thing is, we got down to 5, not on that initial drop when we hit all the way down to 60K. We hit 5 here on the 12th of February when it was just like kind of slowly declining over 3 days, and it hit 65K. That's the day 5. The other day only hit like a 9 or an 8. This is the one that hit the 5, which is odd because higher price, not a whole lot of action, but just, again, fear and greed index, it calculates overall sentiment of the entire market, not just price, but what people are doing, what moves they're making, and also a good degree of what's going on with like headlines, media, social media, all that kind of stuff. That stuff factors into the fear and greed index. So to see it go to a 5 on a day where really we didn't have that much action, it's kind of odd.
Yeah, it like, and I was telling you this in the green room, is like, if it's telling us it's a 5 right now, then like, do we trust it later when it's like at a 90 or at like 100? Like, at what point does the fear and greed index, like, we know that all the signals eventually zero out to being useless, you know, whether it's like charting or sentiment or whatever the hell, like every signal eventually becomes less and less like less and less useful in terms of like action and stuff. I don't know if this necessarily, like, if it's a 5 for sentiment, it's certainly not being reflected in the price action. You know, if we saw a 20% drop in a day, then yeah, that would be a 5. Like, that would make sense to me. But there wasn't any of that, you know, that like.
That's true. But also, like, even some of the odd things that we've seen, because remember, October 10th was the day that we had that massive liquidation event, and we pretty much went from like 120K all the way down to like 90 effectively. Yeah. During that time, it started out at like 64, 70-ish, and it only got all the way down to 24. And that was after the single largest liquidation day by like a factor of 9. $20 billion was liquidated that day on the market. That's utterly massive. Like, for the folks that have been watching the show for a while, you know, I always pull up the CoinGlass liquidation chart to show the history, and the chart scales based on its own scale. That one day broke the scale. Like, looking at the rest of the chart, everything just looks like these tiny little blips, and there's just this one giant green candle. And it's like, okay, cool. Thank you for making the rest of this chart useless, because I can't tell anything else anymore other than just like seeing small green or small red. Yeah. But no, it's, I think that the fear and greed sentiment it's kind of like a B plot, if you will, because there's people that are following the A plot, which is, are we in the bull market or the bear market? And then the B plot is like the traders looking at the fear and greed index, and they're like, historically, when this thing gets below 20 or above 80, those are usually pretty decent times to buy for like short-term trades. Like, we're talking like maybe a couple of weeks to like a month or two. And then if it ever gets above 90 or below 10, those are like the big moments where people go ham and really just like double down on stuff as well. And dude, we've spent roughly almost about 10 days effectively below that 10 marker. So people have been really speculating, like, okay, is this the time to like really load up? Is this what we're doing? And by the way, shout out to Dace. He was actually implementing your buying strategy, your buy and sell strategy, which the real strategy is like, if I feel good, I should probably sell. If I feel bad, I should probably bite the bullet and buy some more. And he was like, look, everything's down to the dumps. Sentiment's down to the dumps. Blood's in the street. maybe time to buy. Which,
Yeah,
by the way,
yeah.
folks, nothing we say here is financial advice, but we're just saying what we've seen, the trends that we've seen in the past. It's up to you guys to make the moves. I'm just letting you know what some of us around here are doing.
Yeah, I think if I was moving large chunks of money and had massive amounts of liquidity, I would also be buying right now. But like my strategy is not very difficult. You know, if I, like you were saying, if I feel bad, I buy something. If I feel good, then probably a good time to sell. And I've ignored those things too many times of the sell ones, and
You've learned
and
the lessons.
I've certainly done a lot of buying while feeling bad. That one's easy, but like selling when I feel good, that's the really difficult one, man.
That one is
That's the
tricky
tough
for
one.
sure. Tell you what, before we get much further, I do want to give a shout out to all the good people that are joining us this evening. So, Will, what do you got over there?
It's time, ladies and germs, for the chat motherfucking shout outs, the best part of the show.
Hey, excellent. Alrighty, let's get into it. Number one DGen of the evening, Mr. Moonmutt. He says, good to be here with my DGen family. Good to have you, sir. I know Will's driving, but I'm sipping on a nice silver bullet, so I'll cheers you.
I don't know what you have in StreamYard there, Mr. Zenith, but we also had Mr. Funkmaster Hex and Diamond Hand Degenerate commenting as soon as I made this stream about 8 or 9 hours ago. So I don't know if they show up on your screen at all, but I want to shout out those two gentlemen as well, Mr. Diamond Hand Degenerate and Mr. Funkmaster Hex. Fucking shotgun to you two homies.
Yeah, apologies. I do not have your chats, but gentlemen, always a pleasure to see you. And hats off to you
but not
for
forgotten.
getting in there early, let me tell you.
Hell yeah.
Alrighty. Up next, we got someone who may be near and dear or very close to you, perhaps. That's Sam Stevenson. He says, like the video. Appreciate it, sir.
Yep.
Yes, we do appreciate the oh, there he is. Look at that man getting the pizza.
Yep.
Yeah, we do appreciate every time you guys do the YouTube pleasantries, whether it's like, comment, subscribe, all that kind of stuff. Even leave a nice little comment for the replay gang folks. We love seeing you guys as well.
Yep.
Up next, we got Mr. Hexglen coming in here, waving hello. Good to see you, sir. Hope you're having a good one out there. And then we got our boy Wrecked on Crypto. He says, happy Sunday, gentlemen. Happy Sunday to you as well. And he does also say, Will steering wheel for the win. Yes, the ship's on, if you will.
Yep. We are driving the bad idea truck. So the what do I call this thing? The crunchy Corvette on the asphalt seas or something. I used to have like the concrete on the concrete seas. That's right.
There you go. Being the road pirates can't stop you when you're sailing your galleon.
Yep.
Jemmy is also here to say, Will, please stay safe out there.
Absolutely, Jemmy. Always safe. Safely dangerous. Dangerously safe.
True. And then we got our boy Mixed Mix, aka Jocelyn, with an odd comment. Something Pulse Chain kind of sucks right now. It's like, brother, I have bad news.
Yeah.
Altcoins really suck right now, and Pulse Chain is part of that gang. So apologies, but he does say fam. So hey, we know you, we like you. You're around here. You can come in with controversial takes. We're always happy to have them. And hey, we're happy to talk about them. Pulse Chain is the big news for Pulse Chain right now. Is like everything else, it's in a waiting period, which is when's Pulse ProveX going to launch. And we had the SAC. We have some details about ProveX. We have the beta, but we're waiting. And it's an altcoin. Altcoins are not doing well right now, especially considering we've effectively had, what is this? October, November, December, January, February, 5 months of down. So if we're going 5 months down, I don't expect altcoins to really make moves in that time.
The protocol is live. It works. I was fucking with it on a week from today, or a week ago today. I was doing it live on stream, bumbling through the process, and I did not get a successful transaction, but it does work apparently. I couldn't figure it out the whole way. It's a little bit clunky, but I guess it sort of kind of functions. I'd be curious to see if there's $10 of USDC in my Pulse Chain account. But we'll see.
Well, you'll just have to report back to us and let us know how your trial run is going over there.
Yeah, I guess so. I mean, if anybody wants to, you can check the public wallet. It's will.pls.fyi. So I don't know if there's 10 USDC that has, or like 9.8 something that has arrived in there since I tried doing the transaction, but I couldn't I kept I kept getting stuck on the page where the transaction was trying to go. I'd already sent the money on Venmo to the place it was supposed to go, and I'd done the proving thing on there, but the ProveX website wasn't processing the Venmo proof that I kept putting in. So it was getting stuck on the TradFi side, and I couldn't figure it out. And I just kept like recycling it, and then it would open the new page and be like, aha, it's proven that it's done, and bring me back to ProveX. And then it would just like sit there and like load up forever. So Ricky, if you're watching right now, I'm not sure what's going on with your protocol, but a how-to video would be very helpful for peanut brains such as myself that don't really know what we're doing. Maybe Fast Abdul, maybe Crypto Coffee's already made a how-to video, and I'm just kind of shouting out into the ether here for no reason. But I certainly don't know how to use it.
I think Coffee might have a video. I know there was a little explainer video that Tracker and I covered over on the Walk the Block last week on Monday. That was a decent little one explaining like what's going on with the protocol, what's going to happen with the token and that kind of stuff. So there is information out there, just a matter of finding it.
Yeah.
Yes, Mr. Mix, aka Jocelyn, he says, love y'all though. There can be more better days. I would argue there will be more better days. But yeah, look, there are different seasons in crypto. There's even a full theory about that, whether it's crypto winter, spring, fall, summer, all that kind of stuff. Haven't looked at those diagrams in a hot minute, but if I had to guess, I would bet that they are saying it's winter for sure. And those are definitely technical analysis driven. So there you go. We also got Mr. Hexagon Lost in Asia coming in here saying, hey, D-Gents. Good to see you, sir. Always a pleasure. But yes, that is pretty much the end of all the chat shoutouts. So with that being said, let's get into it. What do we got going on tonight? Well, the Dutch House of Representatives advances a controversial 36% tax law. Certain assets like equity in a qualifying startup company and physical property used for non-investment were exempt from this 30% tax. They recently advanced a legislative proposal on Thursday to introduce a 30% capital gains tax on savings and most liquid investments, including cryptocurrencies. There you go. The legislation reached its 75-vote threshold to advance, with 93 lawmakers voting in favor of it. Under the proposal, savings accounts, cryptocurrencies, and most equity investments and gains made from interest-bearing financial instruments are subject to the tax, whether or not the assets are sold.
Yes.
That's some big language going on there.
Fucking gay, man. Like, hey, if you've got theoretical gains, then we're going to tax you on your theoretical increase, whether you've sold it or not. So now what happens when we tax you? Well, now you have to pay us money. Oh, no, you don't have any money. Where are you going to get the money? Well, I guess you better sell some of the thing that you have so that we can pay the tax on it. And in the sales process, oh, no, now the price of the thing goes down. Now everyone's fucking selling it. And now the market plummets. And so now you've lost money that you never made, or you've lost a portfolio position that you've never turned into like an actual real profit. It's all just theoretical. And the price of the asset tanks because everyone's fucking selling it at the beginning of the new year. And it's just like, it just sounds absolutely fucking ridiculous to me that they would do this. And their reasoning, I was watching some videos on it earlier as I was driving. Their reasoning is for doing it is that the government is operating at what they predict to be a $2.6 billion deficit. And so they're trying to bridge that gap of $2.6 billion of being in the hole because they're not getting as much tax money as they want, or some fucking bullshit or something like that. So like absolutely crazy. Now there are some exemptions, like you were saying, the housing and the startup like businesses and things like those aren't going to be taxed at this same rate, but like 36% is a fucking lot. And also savings accounts that are under 500 euros also are exempt. So what I predict is going to happen is we're just going to see a whole bunch of savings accounts being at 450 euros or 490 euros or some shit like that to weather this crazy storm. And yeah, it's fucking nuts, man. Those are my thoughts on it. What do you think, bro?
Look, I understand the desire for capital gains tax. I get it. I don't agree with it, but I understand the sentiment. But once you also cross the line of no longer going from taxable events, which is like actually selling, but instead just taxing current holdings that have grown, that really moves into a very destructive cycle, exactly as like you just described, which is that what you're doing is you're effectively taxing non-existent money. You're forcing people to come up with theoretical money that they may or may not have, because at the same time, it's all kind of dependent on when you draw that finish line. Because if you draw that finish line on the 1st of January or midnight on December 31st, right at that New Year's, but then like the week after the asset dumps in price, cool, you're now taxing somebody on something that they like literally don't have. And at that point, you're forcing them to potentially sell at a loss if they don't have the cash or capital available for it. And even if they do, it's like you're just sucking money out of the system of people for the purpose of like just building up more money for the government. Granted, the Netherlands isn't the world reserve currency and they don't do the money printing like we do here in the United States. But at the same time, it disincentivizes property ownership. And property ownership is one of the key fundamental building blocks that has really built the West, which is that you are secure in your stuff. You can't just have it taken from you. Taxes are a bit of a necessary evil to, fund the government to keep it going. So you can have like civil society that actually has things like police forces, firefighters, people running like all the different services that come with the country. But at the same time, it's like, go for it.
I got to stop you, Z. Taxes do not fund the government. The omnibus spending bills fund the government. The Federal Reserve funds the government. Taxes do not fund the government. Don't you go lying to the folks at home like that.
It's if you go from that strategy, it's like, yes, the spending packages fund the government, and then this is just recouping the costs, attempting to recoup the costs. But I don't understand why there's been a fascination over like these wealth tax style events, especially in like it seems like the last decade, because it started getting floated around during the Biden administration. And then now we're seeing it across the world. And there was a bill passed in California that drove tons of massive companies out of California. They're predicting that their like $2 trillion tax revenue is going to be cut by about half because of this stuff. So yeah. There's an argument of people out there saying that like a small increase in taxes is not going to cause flight from the state, but there's a threshold where it will. Just because someone likes the sunny beaches in California doesn't mean that they're going to stay there forever, while you kind of like rake them over the coals and just pry their wallet off their still living, breathing body. It's like,
bro, 36% is not a small amount. And what's that magical curve that we talk about with like, are you taxing too little or the Laffer curve? Yeah.
Look, the article even here shows pretty much exactly that. This is a different view of the Laffer curve, but what it's saying is that under the current tax, they're expected to raise 3.3 million euro. Under the new tax, based on all the secondary effects like people moving their money, moving their businesses, moving themselves, starting all those various bank accounts with 500 euro or less in them, you're actually going to be decreasing the total amount of taxes you get, which is their new estimated tax they're going to be pulling in is only 1.9 million euros. So that's like probably like a little more like 30-40% cut in overall tax revenue, just because you thought that if you increase the taxes, then that means that you're going to get more money. It's like, no, people are rational actors. They're going to act in the best interest. They're going to go where they're treated the best, especially in today's day and age where it's never been easier to move geographically and then move your funds and all your digital assets like immediately as well. It's everything is so fast and so easily movable. It's kind of a fool's game to really like try to go for this kind of stuff. Yeah.
I will say like, I could see theoretically governments around the world making it more difficult to move, restricting the freedom of travel, restricting the freedom of movement, Like I could see that happening. We saw it happen a little bit during COVID where I don't know if this was a thing where they talked to you about this, but what I was hearing down in Florida when COVID started popping off is like, oh, we're going to start putting up checkpoints and like requiring people to show like, hey, I'm an emergency worker. I need to be allowed to travel on the road and stuff. It was very like, Nazi Germany papers, please kind of thing. And that was being talked about in the beginning of the COVID pandemic.
It's once you start restricting the ability of people to leave, you're really reducing the ability of people to opt out of a system. And once you remove the ability for people to opt out, you start moving towards that tyranny side of the scale very, very quickly. Because the whole point is like everyone has to be a consenting party. If you are unable to dissent, aka leave or disagree, then it's really just by force. And I think that's not a great look to go down, and it starts the road towards a lot of even worse things.
Yep. And like the thing that I talk about oftentimes. Can you speak? Can you spend? Can you move? Can you defend? Right? Like and those are in opposite order of importance. Like your ability to defend yourself is the most important thing, right? Without the guns, with the countries where they take the guns away, you get fucked by the government real quick. Then after they take your guns away, they restrict your ability to move. Then after they restrict your ability to move, then they restrict your ability to spend money. And then after that, they fucking cut your speech off. And you can't, like, once you can't do any one of those four things, you're no longer a sovereign individual. Once there's no more like free travel on the roads, because you got to worry about bandits, because you got to worry about checkpoints, you got to worry about the government, you got to worry about, whatever. Right? Like, oh, I can't get on a plane because we haven't swabbed the inside of your butthole to check for coronavirus or whatever the hell happened over in China to the US diplomats, right? Like I don't know if you remember that headline. Like that shit was fucking crazy, man.
I don't quite remember that one, but I definitely remember the scene from Rush Hour 3 where the two characters go over to France and then the inspector's like, "Oh, I don't know what you're doing here. We're going to have to perform this cavity search."
It's crazy, man. Like flying in airplanes is just crazy to me. Ever since I've started spending so much time driving, and like, yeah, it's convenient to get somewhere faster when you fly, but like they just treat you like dog shit. They treat you like cattle. Take your fucking shoes off, you peasant. Stop wearing that belt. One time one person carried a box cutter and took down some towers allegedly, so you can't wear your belt and shoes. And also, you better throw away that jar of peanut butter because it might actually be plastic explosives or something. And it's like, are you fucking kidding me, man? Like, you can't take water bottles through security. You can't do all these crazy things. Like, look at it, for those of you guys that are old enough to remember what airplane travel was like pre 9/11. You can definitely say that, like, yeah, it was awesome. It was great. Like, they used to give you fucking lunch bags before you went on the planes. It was comfortable. There was plenty of leg room. Now there's like, I don't know if you've seen the TikToks of like the shit going on up in Canada. I can't remember what it is, like Air Canada or WestJet or something. But it's like people attempting to sit down in the seats, but they're so close together that you physically cannot fit your knees into the sitting space on the plane. They treat you so poorly. So like a person's ability to travel and be a sovereign individual is like dictated by what they'll accept in that category. So anyways, I'm pontificating and going way too far into this. The point is that like Denmark is taking away people's ability to spend money by charging people money that they don't have for a theoretical item that hasn't like come to fruition yet. It's like, you owe me 47 fruit, but your tree's not grown yet. And it's like, what? Well, I gotta go buy fruit now,
That's
and
actually
so
a pretty good analogy for that.
Yeah, it's absolutely absurd that, like, man, the Dutch used to rule the world. Imagine that. And now look at them. Look at them now.
Yeah. Look, I guess to bring it back to kind of why are we talking about this on the crypto channel?
Mm-hmm.
If you've been following this for a while, and also if you remember the book club that we did a long ways back where we talked about the sovereign individual, the guy in that book was really kind of like forecasting the idea that when you have the ability to move everything over the internet and also move more easily than ever, people are just naturally going to go to where they're treated best. People are going to start referring less to like their nationality and start going to where they can actually be that person. What's the term where the guys that digital nomads, excuse me.
Yep.
If anything, this is kind of just pointing more in that direction that's kind of been like prophesized about, which is like the digital nomad world is theoretically coming when stuff like this starts happening. If you do the opposite, which is you actually start competing instead of restricting, you're going to kind of get the digital nomad sense from the other standpoint, which is people are going to go where they're treated best, or the inverse in this case, as we're starting to see, is people are probably going to go where they're going to avoid where they're not treated well. So the world is trying to figure out what to do with crypto right now. We've seen a lot of different countries over the last couple of years trying to put out their own regulations, market structure kind of stuff for it, whether it was like Singapore, Japan, China, the UK, EU, and now the United States is throwing its hat in the ring as well. It hasn't been solved yet about what's going to be going on. And by the way, there's a great Tom Lee clip where he's talking about like different geographic rules for cryptocurrency doesn't really make a whole lot of sense because you're treating the individuals geographically, but the thing itself operates internationally or even interplanetary if you can start beaming those signals out to space and stuff. So trying to have one set of rules for everything, unless you can really use some sort of like networking or coercion or diplomacy to get all the other countries on board, People are just going to
Yeah.
migrate to where they go best. I hate to say
Yeah.
it. Apologies to the Netherlands. It's not looking like a great spot to be a crypto bro or have over 500 euros apparently.
Bro, they're basically saying like, hey, if you've got stuff and you want to keep it, you should leave. You know, you should go somewhere else. You know, we don't want wealthy people here.
Yeah.
Fucking get out, or we'll take your goodies.
It's a big
Imagine that. You go. It's like, hey, if you don't give me a third of your stuff, I'm gonna hurt you. Do you want to hang out at that house? Probably fucking not.
No. And I think you were correct as well, which is like 36% for a tax is, in my personal opinion, is rather aggressive. Because gosh, I remember like back in the day growing up as a kid, like the thing that people told me was like, when you do your budgeting, think about like 10% for taxes, 10% for the tithes to the church, and then the rest of it is you got to figure out what to do with it. The 10% tax rate, that was pie in the sky. Oh my gosh.
Yeah. You're only getting a 10% tax rate if you make like $20,000 or $30,000 a year. You know, try again, reset.
Yeah, it's rough. Alrighty, tell you what, I think we beat this one up pretty good. Tax is bad. Go where you're treated best. Crypto is unfortunately fallen into that for the Netherlands. But we have another classic crypto blunder here coming from you as well. Coinbase says some customers were unable to buy, sell, or transfer amid brief Thursday disruption. Imagine that. A centralized exchange holding all of your stuff, allegedly, that is unable to help you do or move or do anything with it. Sounds like an issue.
Yeah, bro. Like in the crypto sphere, if you don't own it, then it's not yours. If you can't control it, it's not yours. If you leave your bread at the supermarket in the wall locker that they're like, hey, we'll hold on to your bread for you until you want to eat it, right? Then it's like, I'm hungry for some bread right now. You go to the superstore and it's closed. And it's like, oh, no, my bread. I can't get it.
Yeah. Anyways, coming to us from Morningstar. Here's our article here. The service issue comes as the crypto giant is set to report earnings after hours. Coinbase's trading was briefly disrupted on earnings day. The world's largest crypto exchange, Coinbase, alerted its customers on Thursday that some of the services had been briefly disrupted. Quote, we are aware that customers may be unable to buy, sell, transfer on Coinbase.com at this time. Our team is investigating this issue and will provide an update. Your funds are safe, end quote. That came out at 10:07 Pacific time on Thursday. Later, the company posted on social media that the issue had been fixed. The root cause of the disruption was a technical issue unrelated to trading volume. Some users briefly experienced interruptions in their abilities, blah, 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 blah. Derivatives and equities trading remained unaffected. This wasn't the first time the crypto exchange has faced various disruptions in recent years, like many of its peers. Coinbase experienced issues during the widespread Amazon Web Services outage in 2025, and again during the Cloudflare outage in later that year. On Thursday, some of the people took to social media to voice their frustrations. The disruption comes at an uncertain time for the crypto industry. Bitcoin is down 47.9% from its all-time high intraday, and Ethereum is down 61% from its intraday high, according to the Dow Jones market data. All right, so is this the classic story of trying to remind people that DeFi is the way, and if you keep things on central exchanges, it is not your keys, not your crypto? Yes, it is. But there's also some bigger implications with this one, which is that notably, this happened on earnings day. For the folks out there that don't know, earnings day is a big deal because it's the one day of the quarter where we actually get the results of what they've been doing for the last 3 months. And there are usually some decent swings going either direction on that day. And it's always based around earnings. Correct. This is one of the most popular days to trade options, contracts, or even some spot for people that do that kind of stuff. Similar to whenever Jerome Powell, the Federal Reserve, gets up there, we can typically watch how the speech went based on whether we got a red or a green candle on the hourly chart. And in this case, you can also tell exactly how these things kind of go when it comes on earnings day. Having an issue with your centralized exchange, and you are one of the largest central exchanges in the world, by the way, that's not a great look. And that is kind of the stuff that like investors care about and look at. So if you're a person or a CEO that really cares about your stock price, not great stuff. If you're a customer, a crypto user who likes to be able to do things when you want to do things, this is also definitely that. But additionally, we've been following the crypto market structure bill, or the Clarity Act, for a while now. We have a battle between the crypto exchanges and the banks. Do you remember who one of the biggest proponents for that bill on the crypto exchange side is?
On the crypto, that was fucking Brian Armstrong. He was the guy. He was like, "Hey guys, come look at my thing and come look at the stuff that we do."
Exactly. And which exchange does Brian Armstrong represent?
Oh yeah, that's right. The one that fucking failed earlier.
Oh, Coinbase. There you go.
Womp womp.
Oh,
Look, don't get me wrong. I love Coinbase. It's functional 99% of the time. But the fact that it sucks 1% of the time, oftentimes at very inconvenient times, is just like, well, that's enough for me to like not keep my stuff there, you know?
yeah. Look, there's also degrees to the severity of the issue. It's not like people had their accounts just lost, drained, hacked. It was frozen effectively. So in the grand scheme of things, from the severity side, is this a huge risk? No, I would argue it's more of an inconvenience, actually. I don't think there were any real movements in the market that day. So if we're looking at Thursday, there was minimal movement. Bitcoin pretty much started at 67, ended at like 66.5. So not really any movement to miss out on that day. But again, it's just
so we got lucky.
Inconvenient thing. That is one way to look at it as well, which is you got lucky, because the tinfoil hat crowd is absolutely going to look at these things and say that it's all intentional, or that, to take it one step back, you could even say like they knew about these things, they didn't do anything, therefore the fault still relies on them. I'm not quite saying that stuff. Technical issues happens. This appears to be a technical issue. It doesn't seem anything malicious based on what's going on this day, but there has been a lot of speculation in the past that centralized exchanges do engage in this kind of stuff. And also even other trading houses, like back in 2021, when the GameStop stock was just going ballistic, Robinhood was one of the people where they did something even worse. Not only did they just like, oh no, everything's frozen. They said, based on what's going on, you can only sell, you can't buy. And it's like, I'm sorry, are you forcing actions on your customers? That is a big no. That's a big red flag. So as long as these issues persist, people like us are always going to try to preach the good word of decentralized finance and be like, look, take possession of your crypto. It's a big responsibility, but at the same time, you're not going to run into stuff like this, and you have a whole plethora of opportunities that open up to you, being able to use decentralized exchanges, being able to stake, being able to use DeFi products, all that kind of stuff. The centralized exchanges at this point, in my personal opinion, are still very much a necessary function due to how money coming in and out works. I would love to see ProveX really just put these guys out of business for good. That'd be fantastic. If we could just onboard cash straight from like PayPal and Venmo, that'd be fantastic. Until that happens, centralized exchanges working in conjunction with your local banks, those are going to be the way to get cash and crypto on or off chain. So seeing issues like this, especially at a pivotal time right now, where Coinbase is trying to go up against the banks and say that, no, we are just as good, if not even better. I can't tell you the last time my bank said, oh, sorry, can't do anything today. We have a technical issue. It's like, no, those guys are pretty darn good when it comes to uptime.
I could tell you, anytime you try and make a greater than $1,000 transfer and it's a weekend, and it's like,
that's fair. That's actually a very good point.
Like try pulling out more than $1,000 cash from an ATM. Try making a $5,000 purchase when the bank is closed, and they have a limit that they set on your card that like is correlated to your account with your money inside. And they're like, oh, we think it might be suspicious. We're not going to allow you to spend your own money. And it's like, yeah, because we think you might be, tripping over your own dick and accidentally you got hacked, you dumb idiot, So like it just. Banks piss me off when they do that. I wish that I didn't need them. I wish that I could function without them. And I know that one of our guests that we had on a long time ago was talking about how he lives bankless, and maybe that's the next step. Maybe.
Yeah, it is. By the way, Mr. Wrecked on Crypto, our man in the field, he's coming in here saying Coinbase has not been great lately. He's actually had several issues over the past 2 weeks with transferring. I would love to hear more elaboration on this. Was there a particular like network or coin that was an issue? And was it only an issue going out, or do you have issues coming in as well? I would love to hear more stories. We got to collect the data. We got to understand what's going on. But I think the only real issue I've had with Coinbase on transfers is that it takes longer than it definitely would do if I was just doing it on chain myself. And I ended up going to some other networks. Like if I wanted to transfer USDC to a wallet to go to a DeFi exchange, I ended up just going through like the Polygon network because it was like 10 times faster than trying to use the Ethereum network from those guys. And even then, I was still waiting like a couple minutes at a time, which in the grand scheme of things, is it that big of a deal? No, but it's like we can do it a lot better elsewhere. So it's always just a nuisance whenever you run into it.
Yep. And I can't remember who said this. I think it was Sami, but it's like, you treat you treat these exchanges the same way as you would a public restroom. You don't want to spend all your time there. You want to get in, do the thing, get out.
Agreed.
Dump off the peas and poops, and then get the fuck out of there because it's not a cool place to hang out. It is a place for business. You do the business, you get the fuck out. As far as like what Coinbase is for, like onboarding and offboarding, pretty good, pretty okay, pretty acceptable. Way better than FTX. Way better than a lot of other places. So that's my 2 cents.
True. Tell you what, not a huge story on that one. Pretty much, folks understand what the centralized exchanges are, understand when and how to use it, exactly like Will just said. Get in, get out. Remember to use the little toilet paper ring thing whenever you have to, sit down on it.
Go get a fucking bidet, boys and girls. Clean your butts with water.
There you go. All right. Tell you what, we actually, our fine co-host could not be here tonight, but he does have a really good tweet. So coming to us from Anonymous Bean, aka Brendan of the DGen Roundtable. He's been tracking some important data that's been going on lately. CPI numbers, the Consumer Price Index, aka inflation. Let's see what we got going on here. CPI data strong again. Overall year over year, 2.4%. Core year over year, 2.5%. Both lower than the previous month. That is an important detail right there because it is an ongoing trend, and we're not at the 2% number, but we're approaching it. So overall, it's good news. It means we're going in the direction that needs to go. Job market report also came in incredibly strong a couple days ago, but I take those numbers with a grain of salt. They haven't been accurate in a long time. If you remember the last time we had a Federal Reserve meeting, or actually 2 times ago, Jerome Powell actually came out and said that he thinks that he has an accurate gauge on just how off the numbers are. He estimates that it could be 20 to 40,000 jobs either direction. So if we're looking at a jobs report that says 40,000 jobs were created, that could mean 0. It could mean 80,000. It's a range. It's just probabilities at that point. CPI data continues to show inflation is lower. Some people think we could be moving towards a deflationary setup. This could increase the chances of a Fed cut, but more likely, the jobs data, bogus, will keep rates steady. FedWatch still has a 90% chance of a hold for the next meeting, but we have a few more weeks to change that. Pretty clear that Jerome Powell has been wrong about a lot in the last couple of years, including the impact of tariffs on inflation. He's been good when things are the status quo, but fails miserably at pivoting. Waits too long to raise and too long to cut. Overall, the economic data looks very strong. This means crypto could see a bounce or a lower/shorter bear market. So what Brennan is alluding to on this one is saying that when economic data is strong, it means that recovery is likely imminent. So if we flip back over to our chart here, well, we've been going down for a bit, but if the overall crypto market is tied to the overall larger markets at this point, which, by the way, I happen to think it is, largely due to the influx of traditional finance this last cycle. But also, we've seen a pretty decent correlation between Bitcoin and S&P 500 over history of time. There are periods where they deviate and can actually operate independently. Like, for example, right now, we've seen that crypto is down about 40% over 5 months. Meanwhile, the S&P 500 is still cranking to new all-time highs over that same period, pretty much. But overall market conditions do factor in when it comes to investor sentiment. And that's largely what the crypto markets are. There are people that are out there for the use cases, but at this current time, I still do happen to believe that the majority of people in this game are in it to make money. And that's exactly who you're trying to attract there. So overall markets, if they start to improve, like Brendan is saying, could be a possible case for a bounce. If that's the case, and this is also assuming 4-year cycle is still in play, the current trajectory would mean bear market low sometime in late 2026. If the overall factors shift a little bit, it could mean that that low could be in sooner. Some people are even arguing that this right here is the low. I personally happen to disagree with them a little bit, but I understand what they're going for. But at the same time, this is pretty much just like a 50% correction from the top. The last cycle, we had a 78% correction from the top from bull market top to bear market low, and this time frame is also a lot shorter than the other ones, which is what leads me to that. But this is something that we've been following for a while, which is that overall market conditions, inflation, jobs report, investment, money going in and out of crypto, overall monetary supply, all that kind of stuff factors into these things, and that's what we're watching. In the past, a lot of these things have been lined up together, so it looks like the 4-year cycle and the business cycle and the monetary cycle are pretty much hand in hand. This time, on the time scale, we actually have a bit of a dislocation, if you will, which is that the crypto cycle has ended, the business cycle has extended. So now we're at the big juncture where we're trying to figure out, okay, what's going to be the bigger driver? Is it 4-year cycle? Is it business cycle? Is it global monetary cycle? All that kind of stuff. But at the end of the day, for you and me, the things that we care about, the cost of peanut butter is not going up as fast as it used to. Still going up a little bit, but we'll take it, I guess. I don't know. Will, what do you think?
I think that the numbers are lies because they're not useful, like to the common man. This is like the campfire stories that the government liars tell to the other government liars that they use to print money that makes you less powerful. So like, what does it mean for you, the consumer? Like, doesn't fucking matter because the price of everything is going astronomical very quickly. So like the only thing that it matters to me is like the second order of effect. Like, what is the Fed gonna do with these lies that they're telling each other about these lies that they're doing to print the money? You know, that's all that I care about is like, what are they gonna do with these bullshit campfire stories, and how is that going to affect me? Because I know that the price of things has about doubled over the last like 5 or 10 years or some shit like that, or maybe longer than 10 years. But like, what's the McDonald's McDonald's Big Mac? Yeah, the Big Mac tracker. Like, what is that telling us? That'd be some good data that I would like to consume. I'm also a little bit hungry.
In case you didn't know.
Yeah.
Gotcha. Tell you what, though, we actually do have our man in the field reporting back to us. Let's see what he says. Mr. Wrecked on Crypto, he says, first issue was my ETH was locked in pending state after confirming for over 24 hours. My most recent issue was the security review hold for 72 hours because it seemed risky. That is odd, especially considering this part too, which makes no sense because he's been KYC'd as a customer for 12 years. Seems strange to do this now. I agree with you, sir. That definitely seems strange. He also says, to add to this, there's been no suspicious activity or huge monetary fluctuations at all. What they're doing seems to be random with no basis for it. ATAIL. Got it.
Yeah, I think they just slapped that risky thing on there just so that way, like, you can see something. They're probably just like, I don't know. They're probably someone somewhere at Coinbase that is pulling the levers has their thumb up their ass instead of like paying attention at work, and and you got passed over. So I don't rely on Coinbase too much for anything.
That's true. My speculation would be that it's just machine review, and the machine algorithm decided for some reason that you haven't done anything in a while. You're doing something now. Seems odd. Why are you doing something now? Could be you, could not be you. Yeah, weird stuff, man. Especially because you've been KYC'd for 12 years. That is a long time to be a verified user doing normal activity, and then all of a sudden just have that. So,
yeah.
Apologies, sir. Take it up with Brian Armstrong. Maybe tweet at him.
Imagine there was a hammer that when you swing it, the hammer's like, I'm not going to hit that nail very hard because you haven't picked me up in a month. You got to like warm up or something first. I don't trust you. And it's like, get the fuck out of here. I hate it when tools don't work the way that they ought to. But like, granted, Coinbase is a complicated tool, but it's just like, seems strange to me. And so like, what do we do with this data? It's like, okay, well, if we know that if it doesn't work often enough that it makes us angry several times, then like we have to limit our usage of it to be appropriate to the goals that we want to accomplish. And it's like, dang, I hope you get your money into Coinbase and out of Coinbase before like something important happens, like, oh no, I gotta excuse me, I gotta make rent, or I gotta bail my mom out of jail because she ate the neighbor's cat, or I have to get my money into crypto now because everything's on a fire sale. It's like, do the things you need to do before you need to do them, I suppose. And if you do need to do them, then don't rely on Coinbase. Rely on the decentralized stuff. Rely on ProveX, which has not proven that it works for me yet. So
There's a great irony in that fact right there. ProveX has not proven itself.
Yeah.
Hopefully
Not to
soon
me.
enough.
Maybe to other people. It could just be that I have a bad case of know how to use program correctly.
Yeah.
That is very likely the case.
Error is in the chair, not in the system.
Yeah, exactly. Now, it does behoove the system to have nice, good instructions on it that tells people how to use things and that works when it is used. I would have rather that it would have not been pushed out in beta mode and just waited till it was good and ready.
Well, I think
There's some
beta
nice,
test
clean directions.
You can only
I mean-
test so much yourself. You got to get fresh eyes and fresh hands on stuff eventually to really give it that shake through. So
Yeah, I suppose so.
a public
It is
beta,
blockchain.
maybe not. Private beta, possibly. But at the same time, if you do private beta, people kind of get a little butthurt about who's invited and who's not invited.
I will say my first impressions are hard to redo.
Yes, absolutely. For true. Tell you what,
So-
let's keep this going. So I got another clip here. So Brendan was talking about possibility of strong economy means low bottom. Let's see if our boy Tom Lee has something to say about that as well. Coming to us from Coin Bureau, we have a clip from an interview that he did with Decrypt, it looks like. So let's see what the man himself has to say.
Ethereum, he thinks, we should be pretty close because one, I think sentiment is terrible. The price action's been bad. Tom DeMark, who is our advisor on timing, since November, he's been saying Bitcoin would get towards 60
Mhm.
and Ethereum, he thinks should bottom. Well, originally 2,400, but he says if it didn't hold there, Ethereum would bottom around 1890. So I think it touched it to the penny. He thinks we just have to undercut it once more, and then that's the low. Meaning we're really close to the end. I think the crypto winter is it's either ended already or the latest is April. So I think we're almost through the winter. And spring comes, crypto spring comes.
All right. Tom Lee saying could be over at the end of April. Bit of a groundhog's prediction right here for you when it comes to crypto. But the overall sentiment's that. We just said we have to undercut it once more, and then that's the bottom. Could be really close to the end. Okay, if that's the case, let's see what we got. Well, if we're looking at 60K and we have to undercut 60K once more, we have a lot of data here from the summer of 2024. Let me change the chart here, make it easier on you folks. Great irony, I'm using Coinbase's tracker as well. So we're looking over here. What do we got? Pretty much the all-time high that we had in March. We have some of the lows that happened, whether it was, I want to say that this is the Japan carry trade that ended. This one right here is Germany procedurally selling off 50,000 Bitcoin. So we're looking at 52, 49, a little bit of data here for some support right at that 53 to 51 range. So theoretically, based on that, and then maybe some of the real old data, 48, some confluence here as well. Realistically, if we drop below 60K, I think 50K is a reasonable support area to target. If Tom Lee's prediction of we have to undercut price one more time before we actually get the true bottom, if that's the case, I would argue that's actually not that terrible, because let's pull a quick retracement real quick. If we go price from all the way 126 down to 50, that's about a 60% drop. Based on what people have been predicting for the upcoming Bitcoin bear markets, a 60% bear market, I don't think was predicted this time around. Maybe in the next cycle after this one, but overall, a 60K drop is not that terrible. And we know that there are a lot of hungry investors, Tom Lee included. The man is personally trying to buy and stake 5% of the Ethereum supply. Those folks would look at this kind of stuff as just an absolute steal and would happily eat up that price. In fact, I would argue that's kind of what we saw when we had this recent drop down to 60K, which is that we had an aggressive recovery back up to 70. That's a $10,000 movement in price in 24 hours. What that tells me is that we did not just like move down and sit there. We moved down to a level that people thought was egregious, bought up the difference, and now we're trying to find this new equilibrium here. So Tom Lee, look, if he's correct, I think he's proposing possibly a theory that's between the two dominant ones that we have right now. Number one is 4-year cycle. Number two is extended cycle. Number three that Tom Lee's proposing here is something akin to a new cycle. And if you happen to know Axis Alive and the stuff he's been talking about for a while, something akin more to the gold chart where it kind of just goes up and right forever and has small corrections. Back in, early 2024, 2023, we were talking to Axis and he was saying like, yeah, I could see it where like we think the 4-year cycle is still in effect. And then we drop 50% and then just continue a run to new all-time highs immediately after. This kind of stuff is not that crazy. And is Tom Lee the guy that comes out every week and says that Ethereum's going to the moon? Yes, he is. Does he have a personal interest in seeing that it does? Also very much yes, based on what he's been buying up. But at the same time, I think there is a decent grain of salt to take with it towards the positive side, which is like, look, this guy's a big player in the marketplace. He's not putting up chunk change. He's swinging for the fences on this one, and he wouldn't be doing so without good reason. Granted, he is trying to emulate the Michael Saylor strategy of just buy and hold forever and just become the next whale on Ethereum. But at the same time, the amount of capital that he's driving, you got to imagine that like the guy has a plan. He knows what's going on and he can see what's going on. And he's surrounded by what appears to be a very good team. It's got a lot of people looking at timing, looking at markets, looking at utility, looking at all these different new kind of ways to like use fractional ownership of online tokens. Like the guy knows what he's talking about. So could this be bull posting? Yes. Is that end of April prediction probably more likely than saying that crypto winter's already over? I happen to think so because it doesn't immediately take into account like I want money now. And that's when like he's saying, yeah, there's probably more downside potentially. Yeah.
I have this vision in my mind of a thing, of a program or a chart that I would love to have access to. And what this chart would be is a list of people and all the things that they say throughout time. And then that thing is highlighted green if it comes true, and it's highlighted red if it does not come true. And what I'm envisioning is a big giant, matrix of a whole bunch of red with occasional little tiny green splotches, like let's say the people are listed like in the column at the beginning, so each row is one person, and then time is listed linearly. So like as we go further in time, people say more things, and as they say more things, their column like gets longer, or maybe their each individual box is like crunched down to fit more of the bullshit that they say, or true things or campfire stories or whatever. And then like you can like look at a person's like row and be like, oh, he speaks a lot, but he's wrong almost every time. I would call it the Will's chart of campfire stories is what I would call it. And maybe there'd be like a second chart of like future forecasting, like, oh, this is the timeline that I think my thing is going to come true at this date, and you could even put people like us in there, like the charters or the degens. And then my row would just be a whole bunch of blank shit because I'm telling everyone that it's all going to nothing. And it's all going to the moon at the same time because I don't make price predictions or talk about where the market's going to go. But maybe Zenith would have a whole bunch of like 60-day cycle predictions. So it'd be a whole bunch of like short-term things. And Agent J, same thing. You would see a bunch of short-term actions, and so you would see like his bull case and his bear case. I think that would be an interesting tool to have if somebody could whip up a website with an AI data scraper that could make that for me. I would be very, very happy, and I would give you a high five and charge people money for that. Just a big giant things people say organizer. Because right now, what are we doing? We're taking one small snapshot at one thing that one person is saying at one time. We don't have like a past history to compare it to. So for the data analysts out there, like, hey, this might be a niche in the market that you could fill. This might be something that people would pay money for. It's like, oh, what are all the people saying about all the things? And like take a look at inverse Jim Cramer, right? And you look at all the stuff that he says, and you have yourself a nice, good, jolly laugh. So it was just that was what I was envisioning when you first started talking about this, and you saying all these points. Like, yeah, Tom Lee is pretty much a perma bear, and he's also probably pretty emotionally tied to the things that he is like been buying a whole lot. So. Makes sense that this would be his position.
try and pump his own bags. That's for sure.
Oh yeah, for sure. And like imagine what that would do to his investors if he was of negative mindset. You know, it's like, oh, probably won't be getting as many people throwing money at his thing if he's speaking frankly about the negative potential. So it's like there's a little bit of like salesmanship. There's a little bit of like, I want more people to invest in my company so that way I can buy more Ethereum when the price drops, because it is going to drop. So I have to say good things about it, knowing that the price could very well go down. So I could scoop up more of it with this money that they give me now while I talk well about it. So it's like you have to future forecast like the people are idiots, and that also you want their money so that way you can make them more money, you know, because they're going to do a whole bunch of emotional things. So
True. Tell you what, I have a few more that I want to keep going here with.
Yeah, let's hear it.
Similar vein here, but from a different person. So, Crypto Fergani on Twitter saying, many are saying the bear market has officially begun. No, the bear market is almost over. And I really think crypto is going to shock everyone this cycle. In fact, I bet my entire life, 10 years worth of research and entire net worth on this moment. I'm warning you that life-changing wealth is about to come. When I look at the business cycle, what the US dollar is doing, what Trump is doing, the stimulus that's coming after years of prolonged draining, what metals are doing, the new Fed chair, institutional interest in crypto, retail distributing the big money, the Clarity Act, etc. Understand that, and you beat 95% of investors. You all deserve about what's to happen. If you still haven't followed me, you'll regret it. But the thing that he's showing here at the bottom, the data on this one, this is the rainbow chart for those out there. This is based on Fibonacci, the Fibonacci sequence and retracements, and a overall logarithmic decay curve when it comes to pumps and dumps. You'll notice early on, the band is a little more stretched out. At the top end, it's more compacted. But what he's pointing at is that these levels typically show when things are running super hot or super cold. And according to the levels, it's starting to run pretty cold, almost as cold as it has been at pretty much the bottom of the bear market opportunities. This is back in 2022. This is COVID dip, and this is 2020. So based on these levels and what's going on with price action, he's making the argument. Look, price doesn't feel good. The timing feels off. The overall numbers based on price, allegedly, historically, this would be a decent value time in his assessment. And like he mentioned, there are so many different points that we've been pointing to, a lot of other people have been pointing to, about big things coming down the pike, whether it's very soon, whether it's already happened, whether it's already in the works. This is where we have the main disagreement between 4-year cycle and extended cycle. It's this stuff right here. And then finally, last tweet of the evening for you guys. 2 important facts this morning. Fear and Greed Index has hit 5, the lowest ever recorded. The RSI hit 15. These 2 levels were only seen in 2018 and during the COVID crash. That's why I don't think we'll see sub 60K for Bitcoin quickly. It looks like we're going to see consolidation and grind upwards, regaining the momentum and strength in the markets. History has shown that these moments are when you want to accumulate, and you're doing so based on indicators and metrics, not on whether something is expensive or cheap. There you go. These are the points that he highlighted before, back when Bitcoin was at 3K and 4K, and now 62. This is your RSI, your relative strength indicator as well. Boom, boom, boom. And if we go back over to this guy, our Bitcoin Fear and Greed Index, there you go. That's the one. And then if we go back to the max, 2019, 2020, 2022, the data is lining up with what he's saying. The grain of salt to take with this one, though, is that this is largely single-factor analysis, or rather 2-factor analysis, but the 2 factors are largely tied together because fear and greed sentiment is somewhat tied to relative strength sentiment. Relative strength is more technical than the fear and greed sentiment, but they do measure similar things, and the RSI does actually feed into the fear and greed index as well. So it's kind of like building off of that one. Again, when these kind of things happen, historically, as we've shown through the data, they appear to be relatively cheap opportunities, if you will. But that being said, there's a lot of unknowns this cycle. In fact, I would argue this whole last cycle has pretty much been unknown. Were we expecting to hit a new all-time high before the halving? No. Did we? Yeah, we did. And then we proceeded to chop sideways for about 7-8 months there before moving up after the election. And then we also had a giant crash when we had the tariff wars. But then we also went back up and found new all-time highs. And now we also had the single largest liquidation event in history and have moved back down again. So I know it's the meme is, dang, I'm tired of living in all these unprecedented times, but that seems to be a bit of a trend. I'm just throwing it out there.
Yeah, man, it sure does suck to for it to always be the this time it's different.
It's like, dang, I've lived through like 70 of these once in a lifetime moments. What the heck is going on?
Yeah, no kidding. I mean, that's what crypto does, is it ages you faster.
I'm not even saying just crypto though. I'm arguing like the last 20 years.
Oh yeah. Yeah.
But like the overall point is that, have we reached a point that's rarely ever seen? Yes. Does it give you a whole lot of information beyond that we are in the current moment? Kind of, somewhat, but I would argue closer to no, which is that we only know what we know. We don't know what we don't know, and we don't know what's going to happen in the future. We can build models based on it, based on what we think is going to happen, based on history. And if you're not building models based on history and precedent, you're kind of just throwing darts at the wall, seeing if there's even a dartboard there.
Mm-hmm.
That's what I'm saying.
Just fucking throw them darts, baby.
Yeah.
I guess life's a gamble. That's what it all boils down to, isn't it, Z?
Life is a gamble, then it is, sir. But I wanted to ask you, do the arguments about like fear and greed and sentiment, does that resonate with you, or does it kind of just seem like just one more random data point that people throw out, even though there's millions of them?
I'm gonna be honest, man. I don't think I'm plugged into the marketplace, into the fundamentals enough to give it a good. I will say that I feel like shit as far as like portfolios and numbers and things go. So it's like, it makes sense to me. But like I don't see like Bitcoin specifically being like at a 5. Like there have been worse drops with higher F and G's. So it's like I don't really understand that one, but like, it does match the rainbow fucking chart thing that you pulled up. So like, yeah, if fear and greed's at 5, then it makes sense. I will say that there's probably more people questioning. So that's probably right. I don't know. What about you? Does it resonate with you, these indicators and these things lining up?
I say that it does. And I say it for a couple of factors. I think there's historical precedence to it, which I think is a very good data point to have. Additionally, I think it also resonates with like overall mindset, which is, if you've listened to a lot of the books that we've covered in the past, from people going all the way back to the early 1900s that were investors and traders, understanding sentiment of the market, I think, is an important thing, because it helps you really understand like when the music is about to stop in either direction, whether it's a top or a bottom. Things, I would argue, things rarely ever play out the way that we think that they do, but we usually have a pretty good grasp on the general way that it goes. So the sentiment indicators, I think the more technical they are, the more I believe them. At the same time, though, the indicators are only as good as the model that you use to build them. And if your model becomes outdated, that is an issue. You raised this point earlier in the show as well, which is like, if the indicators are unchanged for a large amount of time, theoretically, there could be an amount of drift or shift or error that gets built into them as the market continues to evolve well past the point that the indicator was created. If you can keep your models and your indicators up to date with what's going on in the market, I think you have a much better chance of having them be reliable into the future. But at the same time, though, it's also assuming you understand the market, you understand the data coming in, you understand what's signal, what's noise, all that kind of stuff. I'm not saying it's easy by any stretch of the imagination, but when it comes to these sentiment indicators, I think they're useful. They have a use case, but they're not by any stretch of the imagination the entire story.
Yeah.
Because like Jay and I have talked about this a lot. We always swap stories about what indicators, what kind of things are you using, what are you looking for on the charts, because you can either try to keep it simple, you can try to go way deep into it, but at the same time, you got to figure out what works for you. And for me, the sentiment indicators have been a pretty decent indicator of where we are, but they haven't really give a great indication of where we're going next. Because like, if you look at the Bitcoin fear and greed one, we were sitting at like 60 less than a month ago, back in the 15th of January. And that's in the greed side. And then we went back down to 49.50 and then we dropped all the way down. So it's like, if you follow the peaks and troughs, you might like look at this stuff and be like, okay, cool. January 6th, we went up to 44, came back down, went back up 44, and then came back down to 50. At that point, you might be thinking, okay, we have a building pattern here going up. So we should see this pattern continue. Instead, you get a reversal. And then you also have a bit of a bump, keep going down. Is this the bottom? Nope, that's not the bottom. Is this the bottom? Maybe, but I don't know how much farther we can go down.
Yeah. I'll tell you what, though, I would sure love to find out that we've been in a bear market this whole time and we're not anymore. You know, dead cat bounce or whatever.
Yeah.
That would be cool.
I'm very excited for the future of crypto, especially within the year of 2026. I think that this is going to be an exciting year because there's so many things that are coming down the pipeline for opportunities to build, new regulation, actually giving clarity to the marketplace, inviting people to build more. I think that we really saw a bit of a golden age when it came to all the developers on Pulse Chain building stuff. We saw people just going gangbusters. And that was before there was any market structure or regulation in place. And that was still largely during the reign of terror by Gary Gensler at the SEC. So if that's possible during that time frame. Once we actually get clarity, I imagine that we're going to see even more people coming to the forefront, building cool stuff, doing cool things. Not saying all of them are going to work. There will be some rug pulls along the way, but I'm very optimistic and hopeful for the future of crypto. And I think 2026 has the opportunity to be a very big year from performance, or it could be a big year from opportunity to get in at a low. So either way, it's either good to DCA or it's good to hold on to what you had. But again, none of this is financial advice. You got to make your own decisions.
Yeah.
True. Alrighty, that is pretty much what we got for this evening. But before we get out here, I do want to shout out some of the other folks that have joined us recently. We got some good folks and some very familiar faces coming in here. Number one, Mr. Centurion 54X. He says, "What's up, D-Gens? Good to see you, sir. Hope you've been working on your golf game. I've been trying to get back at it. I know this guy, he's been going hard lately, so very curious to see what some of his recent scorecards are looking like." Up next, we got everyone's favorite Hexkin. That's Tam Tam. She says, "Hello, gentlemen. Good to see you, Tam. Always a pleasure to have you. Glad you can make the stream." And then, good buddy of ours, a guy that has now joined the prestigious ranks of the book club, Mr. Moondog himself, coming in here. I believe this is a love and light, or we have the up and to the right, the pirate flag, and peeking through the clouds emojis. So,
love and light.
By the way, good, sir. Always a pleasure to see you. We had an absolute blast with you on book club. That book, I will say, I know the book itself was like, these prescriptive books only accomplish something if they make you do something. But I will say, How to Read a Book, the one that we read, I've been thinking about it ever since. And the books that we've been starting to read since then, I've been thinking about that book during the time I've been reading the new ones. So I'd argue it did something. It changed my mentality at least a little bit to get me thinking a little more deeply about the stuff we're reading.
I certainly feel guilty every time I like put on my headset and I'm like listening to a book while doing something. And I'm like, oh no, I'm like fractionally absorbing this book. So it is what it is, I guess.
Fair enough. And at least you're at the level 2 comprehension. You're no longer trying to understand what English is, but you're like, all right, we're reading the book quick. Let's go.
All right.
True. Alrighty, Will, before we get out of here, any final thoughts for the evening, sir?
Any final thoughts for the evening? I'm going to be in the Dallas-Fort Worth area. For those of you guys who are hanging out up here, I got to pick up some tablets, some of the Hex doodle pads, and go sort some shit out. So that's what I'm doing for the next couple days. You guys can find me otherwise over. Oh, wow. Look at that. My phone is correctly labeled that I'm going to Rockwall, Texas. Hell yeah. So I'll be in Rockwall. I'll be in Dallas. I might be up in Frisco, Cedar Hill, just in the DFW area. So if you guys are over there and you want to hang out, then shoot me a message over on Telegram. If you want to shoot me a message on Telegram, then go to t.me/Will Stevenson. That is my Telegram handle. Super simple, super easy. That is all that I've got. And a reminder that for next week's book club, we are covering Building a Second Brain by Tiago Forte. And that's all I got. Z, final thoughts from you. Where can the folks find you? What do you got going on?
Folks, you can find me over on Instagram and X at ZenithDI, but more importantly, you can find myself, Will, and the rest of all you excellent folks out there inside of the DJ Roundtable Telegram community by scanning the QR code directly above Will that he is pointing to. Thank you, sir. We're going to be back on Wednesday for Whiskey Wednesday at 8 p.m. Eastern Time, as is all of our streams. On Friday, we have Book Club, 8 p.m. Eastern Time again, where we're going to be covering Second Brain, the second time we're doing this one. Want to do a redo because we like the book. We think it's good. And we don't know if we did it justice the first time around. So we'll definitely put our best foot forward again on this one. But outside of that, we're going to be back next Sunday for our flagship news show every Sunday, talking about what's going on in the world of crypto and any funny or interesting news that is along the way as well. As for me, final thoughts of the evening. Interesting point in the market to be in. Could go up, could go down. And I genuinely mean that. Like, there's a lot of stuff happening. And the price action is showing that it could be a reversal, could be that we're going down to 60K to retest it and maybe even move lower. But this is crypto. We're here for the volatility. That's what we're doing. And in the meantime, if you don't want to pay attention to that too much, there is some fantastic hockey going on at the Olympics right now. For all you hockey folks that have been following it, this has been an absolute blast. And I'm just like giggling to myself watching Team Canada play because it's literally all of the best players on the same team. It is utterly ridiculous how many stars they have. Their power play team is Connor McDavid, Nathan McKinnon, Sidney Crosby, Macklin Celebrini, and then gosh, I can't remember the fifth guy, but he's also a really big NHL player. It's like if you've ever wanted to see like the dream team of hockey players, that's Team Canada. And also Team USA is putting up some good numbers. As it stands right now, we should probably see those guys in a finals matchup for the gold medal match, which is going to be an absolute banger. If you caught the Four Nations tournament last year, very similar stuff. It's going to be good time. And gosh, Team Canada is a powerhouse. I think they beat France yesterday 10-2, just absolutely running up the goals because getting the number one seed in the knockout brackets mattered about your goal differential. So they were like, we just need to score as many points as possible. So if you like action, the Olympic hockey is like the best you're going to see for a long time.
That's awesome. Hell yeah. Go good guys.
Yeah, go good guys. Us, Team A. We are Team A. Boo Team B. I don't know. It's
sports puck instead of sports ball.
Yeah. By the way, one of the stories I've been seeing on Instagram as well is that everyone is like, oh my God, it's so nice watching sporting events without all these just like advertisements and gambling and crypto stuff all over the place. It's like the Olympic arena just has like the Olympic logo on the wall and some flags in the rafters. And we're just like, this is amazing. This is just good.
Yeah.
Gotta love it.
Yeah. People are getting sick of ads. I will say that.
Yeah. I don't know if we talked about it yet, but did you catch the Super Bowl and the ads for the Super Bowl?
No, I don't watch
The
Toy
overall-
Slot, bro.
That's one way to put it. Yeah. The ads this year was like more AI generated and Ozempic style stuff. So
Yeah.
the
Fucking
sentiment
Toy
was
Slop.
definitely down. Yeah. Alrighty, tell you what though, that pretty much does it for us this fine evening. Ladies and gentlemen, I want to thank you all for spending your valuable time here with us over on the DGen Roundtable. We know that time is your most valuable asset, and we appreciate every time that you guys spend it here with us. Ladies and gentlemen, my name is Zenith, but more importantly, you have been watching the DGen Roundtable. Mr. Producer, that's me. Go ahead and get that trigger finger ready because it's time to remind all the folks at home to remember to DGen responsibly.